Hello, and welcome back to Financial Sector Law Focus Podcast. I'm your host, Tato Ramosan. In today's episode, we'll be looking at the financial institutions' Computation of Capital Charge for Credit, Operational and Market Risks Regulations of 2023. We'll explore how the regulations impact on banks' capital requirements, risk management practices, as well as their lending capabilities. So let's get started. Now, the regulations were published on the 11th of August 2023. They are designed to strengthen the financial stability of the banking sector in Lesotho by ensuring that banks hold sufficient capital to absorb their potential losses. Now, the primary purpose of the regulations is to safeguard the financial system by requiring banks to maintain adequate capital to cover risks associated with credit operations as well as market fluctuations. Now, by so doing, the regulations aim to protect depositors, creditors, and the overall economy from potential disruptions. These regulations are essential to maintain public confidence in the banking system as well as to promote economic growth. Now, let us have a look at the key highlights of the regulations. 1. The regulations establish specific capital requirements for different types of risks, such as credit risk, operational risk, as well as market risks. This ensures that banks have sufficient financial resources to withstand potential losses. 2. Banks are obliged to implement strong risk management frameworks, which include policies, procedures, as well as internal controls. This will assist them to identify, assess, and mitigate risks effectively. 3. The regulations mandate a minimum capital adequacy ratio. This is a bank's measure of financial strength. The ratio ensures that banks maintain a healthy balance between their risk exposure and their capital reserves. 4. Banks are required to submit regular reports to the Central Bank of Lesotho as a regulator on their capital adequacy, risk exposures, as well as compliance with the regulations. Now, this enables the bank as a regulator to monitor and supervise the banking sector effectively. Now, let us have a look at the implications of these regulations. 1. Banks will now need to increase their capital holdings to meet the new regulatory standards. This could impact on their profitability as well as lending capacity. However, this increase in capital can also enhance a bank's resilience as well as its ability to weather economic downturns. 2. Banks will be required to invest in advanced risk management systems and to strengthen their risk management practices in order to comply with the regulations. This can lead to improved risk management practices as well as reduced risk exposure. 3. Banks may incur additional costs related to regulatory compliance, reporting, as well as system upgrades. While these costs may be significant, they are, however, necessary to ensure compliance with these regulations, as well as to maintain the stability of the banking system. 4. The increased capital requirements may affect a bank's ability to lend and invest, which could have a broader economic consequences. However, well-capitalized banks are better positioned to support economic growth by providing credit to businesses as well as individuals. Now, in conclusion, the regulations are a crucial step towards ensuring the stability and resilience of the banking sector in Lesotho. Now, by imposing stringent capital requirements and promoting sound risk management practices, the regulations aim to safeguard the interests of depositors, creditors, and the overall economy. While the regulations may pose challenges for banks in the short term, they are essential for long-term financial stability and sustainable economic growth. Now, if you'd like to learn more about the regulations, I've put a link in the comment section below. It will take you directly to a copy of the regulations. Please don't forget to subscribe to our channel for more updates on latest developments in financial sector laws in Lesotho. Hit the like button if you found this information helpful. Share the video with your friends, family, and colleagues to spread awareness about financial sector law developments. Thank you for joining us on Financial Sector Law Focus with Tato Ramosan. Until next time.